Look, there's no doubt that it's difficult to buy your own home right now. Real estate has gotten a little complicated, but not because real estate has gotten complicated, but because of what we see in economic policy, what we see happening to our dollar. But I'll give you a little secret. If you were to actually measure the value of a home against gold and silver, precious metals, they're actually the exact same price. So what you and I are facing right now is the value of our dollar changing, the value of our dollar dropping, and that's why it costs more dollars to be able to buy that home. So will it take some creativity for you and I to get into the market? Yes, absolutely. And it is available, and there are ways for you to be able to profit in this upcoming bull market. Okay, maybe this is a hot take. Maybe this is not the way to go, but since when did it become like a must or a right to own a home? You know, growing up in this country, it was always really only a handful of people had their own homes. And it was really a privilege. You were going to have to work as hard as you could to save money and be able to put money down to buy your own house. For the longest time, you had to have 25% down payment. You had to have 25%. It was also one of the reasons that home prices were lower. The more that we've made it accessible and easier for people to move into homes is one of the things that has caused prices to continue to skyrocket, along with this word inflation. The more the government prints into the economy, the more that housing prices are going to go up. There, should we be buying a home? Is that what you should be looking to do? If that's what you want, by all means, and just realize that you may have to find a different route. Now, one of the things I will say about this whole idea of buying a home is it's always been understood, I think, for most people, that you want to start with a starter home. It's not the ideal place that you want to live in. You want to live in the nice new construction. You want to be in this nice big home, but by and large, everybody starts in a starter home, something that's within your means, where you're able to start building up the habit of paying the bills and allow a little bit of appreciation, and then make the move into a larger home. For some reason, we have seen a bigger and bigger push where the government is actually trying to get new home buyers into new builds, into brand new buildings, which have an extreme amount of costs. You think that by buying a new build, okay, everything's taken care of, you're not going to have any cost. That is not true. New homes have all sorts of repairs because they've just been built, all sorts of things that haven't been worked out in that new property. By and large, if you want to get into the housing market, it's the best time ever. It is a fabulous time. People are negotiating on their properties. You're able to negotiate down. You're able to negotiate cashbacks. In some cases, you can even negotiate vendor takebacks. People will allow you to take the property and live in it and then purchase it down the road. I know it sounds crazy, but this is actually happening right now. It is available out there if you're willing to consider some alternative financing, some alternative routes to be able to get a home. Okay, let me give you a couple of ideas. These are really alternative ideas, and they may or may not work for you. They depending on the property. But for instance, I know of a couple that have bought a home in Western Canada. They've got a property in Ontario that they've not been able to sell. So they're paying two mortgages currently. They are more than happy to hold on to that mortgage and allow someone to come in and be paying them on a monthly basis under an agreement that allows them to purchase it in the future. That gives you the opportunity to go right in. You don't have the down payment, you don't have any of these things, but effectively, it's like you're a tenant. in the meantime. It's what they call rent to own. You get to get in there, pay them. It's covering their expenses while you put together your down payment so that in 2 years or 3 years, you've built up enough a down payment, you're able to close on that deal at a prearranged price and get your own mortgage, buy it out, pay them back, and they get to move on. You get to keep the property at that point, plus any appreciation above the agreed upon price. Okay, so here's a part of this question that people always wonder is that money, what happens to it when you're paying that money every month? In the most traditional sense, when you do a rent to own, a portion of that is going to go towards your down payment, is going to go towards when you are eventually going to close on the property and pay the current homeowner back. Now, every agreement is specific and depends on what you agree upon in that situation, but it is an opportunity. And at the end of that 2 year or 3 year period, you'll have that portion aside that the homeowner will give back to you as your part of your down payment. You, of course, get to continue to save over that period of time as well. Is it pretty? Is it nice? Is it comfortable? No. And you could find yourself in a property that has appreciated significantly, which you get to keep that appreciation upon you closing on the property. Now, why would they take that extra amount and hold it back for you? Is because it's an incentive for you to actually buy the property. If you don't buy the property, then they get to keep that portion. That's the standard when it comes to a rent to own, is that the portion that you're paying towards the down payment, if you don't close on the property, they get to keep it. Now, why would people walk away? Sometimes because the market has gone down. The property is not worth what they agreed to, and they've been able to save themselves from that. When you are in a rent to own agreement, normally you're going to be paying about 15% more annually than you would be if you were renting. Now, on top of what you're paying in that 15% more, you're also going to be responsible for the electricity, the water consumption, heat consumption, repairs, any of these types of things you're responsible for. Because remember, they've already signed an agreement saying that this is your house the moment that you close on it. So you become responsible for most of those repairs, other than some major repairs. You're responsible for a lot of the minor repairs. You're responsible for all the costs. And that is part of that process for a rent to own. Another way that you can get into home ownership without the down payment is something like a vendor takeback. This is one of those deals, and I can give you a deal that I've seen right now that I was a part of. Actually, I wasn't the one buying it, but I was actually the one lending the money. So here's what happened. The person found the property, and the person selling it was willing to give them the property at a 50% vendor take back. So what does that mean? That means that they came in, let's say the property was $200,000. They had to get a first mortgage for $100,000, and the person who was selling the property was willing to hold a second mortgage for that other $100,000, that 50-50. So the person didn't have to have any down payment. All they had to do was pay for the closing costs, and they got into the property. That property became theirs. Now, what happens over the next couple of years? They've got to pay, yes, the first mortgage, and they've got to pay that second mortgage. But then at the end of 2 years, they were able to go ahead, get a mortgage, pay out the entire sum, and move on. So how did they do it? Instead of going to the bank, they went through private lending. By going through private lending, they were able to avoid the minimum down payment rules. And since the seller at the same time was fine with covering that 50%, All they needed to do was get a mortgage through private lending for that first position mortgage, and they came in with no money of their own other than closing costs. Now, that's not always the situation. Sometimes they may, if you find a seller that's willing to do a vendor take back, they might do 25%, and you've got to come up with the other 75. There are different scenarios. It's all about what you negotiate. You may or may not have a realtor that's willing to do that negotiation, but these deals are absolutely out there and available. And as always, thank you for listening to this week's episode of the Four Horsemen of Real Estate podcast.
When the ones around trusting their word, they walk the talk in the world of investment, they make their mark.